Welcome to the first of what I hope to be many FAQ videos I will record to walk everyone through the bear market of 2022. And recently, I sent out an email to members of my email list saying, hey, how can I help you during this bear market? Myself, as well as the head trainer, Peter of the Options Wealth Academy, we wanted to know how we can best shepherd and guide people through this bear market. But before I get to that, let me introduce myself for those who did not get the email or who are entering into my community for the first time. My name is Travis Wilkerson. I am the 2019 U.S. Investing Champion for the Futures and Options Division, but I go by Trader Travis Online. And again, I have a head trainer of a program I used to run, the Success Academy. It's now the Options Wealth Academy. And so my head trainer, Peter, and I, we met and wondered, what struggles people have during this bear market. I've been through a bear market before. Peter has not, as an active investor. He's been through a bear market as like a 401k standard buy and hold investor, but not as an active investor. And so we're trying to pair up our experiences. Now, he's fully qualified to trade through a bear market. He has the strategies. He's just never traded short term through a bear market. So we're coming alongside each other, trying to shepherd people the best we can. And so what I'm going to do in this first particular video is I'm going to cover some of the responses I received when I sent out that survey. And so if you've replied to that email, again, what do you need help with most in this bear market? If you have not replied yet, you can just reply to any email I send and let me know. But if you have replied already, thank you so much. And what I will do is try to tackle as many of the questions I received. And this will be the first video, which I will try to keep between 10 and 15 minutes. So let's get to it. And so the first question I'd like to cover, someone wanted to know, they're looking to figure out some key strategies to make some money in this bear market. When should I buy puts? That was from Joe. And Barbara said she wanted help with put trading to get the best price and entry. All right, so what I'm going to do is touch on that because puts, you're late, but not late. So what you see on the chart here is depending on what strategy or template you're using, right? So Market Club gave us a signal. Market Club is a software that gives us entry and exit signals. They're called trade triangles. You can kind of have to come out to a 5-year chart. You see these monthlies here. These are long-term trading signals. But as far as Market Club, it gave us an entry to buy puts on January 24th of 2022. I'm recording this now at the end of June, so you should have bought puts about 5 months ago, right? Technically, you'd have been up. I did actually, I just did an example of this yesterday when I recorded a bonus training for the Market Club Options program. That put, if you had bought let me just show you. So if you had bought an 1-year out put, you could have bought a short-term put, 1 year out. That's up to you. I kind of go longer time frame now because I want to be in trades a long time. So this is just an example. It's not saying this is the exact put you would have bought. But for a short-term trade, I probably go 6 to 12 months out. So you could have bought a 6-month at the money put here, just picking that at the money one. Matter of fact, let me just come and do an out of the money one too. So this one would have cost about $4 grand. So I'm going to pick one about half of that price, slightly out of the money there, or quite some out of the money there. So basically, I'm going to have that, and I'm going to fast forward to about the market low so far. I still think the market is going to fall a little bit more. Market doesn't care what I think, but I'm just going to pick the lowest point of this bear market thus far, and let's see what these December options are priced at. For that, if you had bought a put per the Market Club Options template. So the 440 put here, wow, it's way in the money. So I'm going to sell that one. Then I'm also going to find the 380 and simulate selling that one. And so you can see if you had bought that, the money puts, you would have made about 3,600 so far. The out of the money put 1,200. If you want percent returns, we take 12.99 divided by the entry of how much that put would have cost. So about 61% return on your money for the out of the money put. And let's see with the at the money 440 put would have brought us 38.45. So about a 95% return on your money. So yeah, you missed out on some gain there. But if you looked at the chart, we don't have any green weeklies, we don't have any green dailies. So technically, we're still able to buy puts, right? Help with put trading, get the best entry and price and entry. I'm not, the best entry would be to use some kind of template like Market Club or part the DMA, where you use moving averages, something like that. So that's how you can get the best entry. Now, price, we shoot for the middle. We just pay whatever price it shows there, except we usually go in the middle of the bid and ask. We don't pay the ask price, we shoot in the middle. And as you'll see, actually in the bonus training, based on these questions, someone asked, I'm going to do a bear market case study where I'm going to place trades. So even though I was late, like the signal to actually get in was 5 months ago. I just bought a put like last week. So I'm like 5 months late. Doesn't matter. Signal is still valid. So I placed a put trade. Do I care about losing money? No, because always my exits, my risk management are there to protect me. Doesn't matter if the market bottoms and goes up from here. Yeah, I'll lose on my put, but I won't lose a whole lot. I'll never destroy my account. So in that case, I'll just jump on the other side and buy a call, right? So it doesn't bother me. But yeah, technically we can still trade puts right now. All right, moving on here. The next topic somebody put here was they wanted some help with mindset. The market's already dropped. We wouldn't be placing any new trades, and existing trades would be closing at a loss. Not technically true. There are trades you actually can place right now, and I'll show you that in my case study when I place my trades. Well, and it also depends on where your account is at. Like my case study probably won't help anybody who already has an existing account, but you can still see the mindset I approach the market with and see maybe a few things you can do. A lot of people think they can't do anything with their portfolio, but there are things, in fact, you can do. All right, so moving on here. So they said you won't be placing any trades. So the only thing left is mindset. For myself, it helps me keep focus and perspective and stops me from panicking. I'm thinking a lot of people would benefit from the continuous mindset lessons. Plus, there's a ton of the sky is falling, doom and gloom noise out there. It's helpful to learn how successful veterans handle the trash. Sally, that is a great suggestion. Consider myself as someone who like lives off the grid. I might as well live off the grid. Like picturing some guy lives in a cabin, living off solar, right, and no access to the outside world. That's my life is not that extreme, but it might as well be because I don't have cable TV. I don't watch the news. People like have this mindset that they feel like they need to be abreast on what's going on in the world, like it's going to help them. And in my experience, all it did was negatively affect my life. So I like to stay focused. You like, how do you know what's going on in the world, Travis? Well, I don't watch the news. I don't have the news, but yet I've heard about arguments over CRT, gun laws, abortions, and tragic school shootings, right? The world and the news will find you, right? It doesn't matter. Everybody else watches the news. And so it will find you, even if you're completely tuned out from what's going on. You can stay abreast. It's just tragic. A lot of tragic things going on in the world. So I found that when I consume all that, it's poison to my mindset. And it just negatively affects me. And then it causes me to not see the opportunities all around me. Like recently, I sent out an email, and I was like, why haven't any of you increased your 401k contributions if you're still at a job? Market fell 20%. Like that's how we used the bear market of 2007, 2009 to leave corporate America and achieve financial freedom. Like we maxed out our 401ks. We put as much money into it as we could as soon as the market fell 20, 30%. And then I've received several emails back from people like, wow, thanks for that tip. I didn't think about that. And I said, exactly. When you're consuming the news, their agenda wins. They have you focused on their agenda, not your agenda. Your agenda is to take care of your family. That's why I like to stay focused, because I can think strategically and say, okay, the market is falling. It's a discount. What can I do to put ourselves in a better financial situation? That kind of thinking can only happen because I'm not consuming all the negative Nelly news, right? And so that's a pure example. It was surprising how many people had not even thought about increasing their 401k. And I'm like, yeah, is the news telling you to do that? Are all these new skies falling doom and gloom? Are those people you're following, are they actually helping you make money? If they are, keep listening to them. But most of the time they're not. And that's what you have to evaluate. Are they making my life better? If not, tune them out, including me. Am I making your life better? If I am, keep listening. If I'm not, tune me out. I'll respect that. Moving on. All right, next question here. Would you consider offering the put ladder strategy again? Yes, I would. As a matter of fact, the person who asked this, we opened it for her. She joined right away. Several is a bear market strategy, and several members are making a killing. One member even bought a truck with his profits, right? And so I was like, uh, because people were making so much money, I was like, yeah, it's probably best if I leave it open during the bear market because before it was closed, I didn't think we would offer it again. But since it's a bear market strategy, people are doing so great with it, I decided to open it again, and I'll put the link below this video. Next one, this person said, "Oh, this is a great one," and two questions or themes are the same, and I think, yeah, I think I'll end with. Oh, this is the second to last one. All right, this one is going to be a little bit of tough love. It may offend people, but it's the reality. Sometimes the truth hurts. This person said they looked into options years ago, but the repetitive narrative that a person needed 10 grand to start with, they found that discouraging, right? They wanted to know for those starting out with smaller accounts, they think learning to trade those small accounts will be helpful. I agree with that. It would be helpful, but in theory, it would be helpful, but the reality is it's usually not helpful. And I'll share my experiences. It doesn't my experiences doesn't make it true or false, right? Or right or wrong. It's just my experiences. The next theme, a question along this same line. So someone said they'd be interested in knowing trading strategies, option strategies to employ for trading small accounts, anywhere from 1,000 to 5,000 in this type of market. They would also like to see proven results of the recommended strategies and methodologies taught. Well, the good news is I've already taught that several times, right? And this is the last time I'm actually going to teach it when I wrap up this current case study. So first, let me tackle the one needed 10K to start with. Yes, my mentor told me the same thing. He said it's best to start with 10,000. And I found that kind of offensive, taken back, discouraged, because the fact was I was completely broke living off credit cards when I first discovered options. But I was whining about it. I'm like, oh, you're rich. Poor folks like us don't have 10 grand. I had a loser's limp, just a negative, stinking mindset, right? Luckily, I had a nice, graceful millionaire that was like, you know what? Having no money is an obstacle, not an excuse. Obstacles can be overcome, but excuses cannot. So the question you need to ask yourself, Travis, is how can you come up with the 10 grand, right? And I thought about it. I'm like, he's right. And so I wound up asking that question, how can I come up with 10 grand? And I wound up selling my vehicle and all the furniture in my house to come up with the 10 grand needed. Now, my friends laughed at me because I sold my BMW and got like a beater 1989 Honda Accord. They were like, no girl's gonna ever date you again. They were correct, right? All of a sudden, my dating life went down the toilet. My family came over. Well, at least my cousin came over. He's like, family's worried you're selling all your furniture. They thought I was on drugs, and they thought I was selling my furniture to fund my drug habit, right? But I was like, so I might as well have been on drugs because he came over. I was like excited, right? I was all pumped. I'm like, oh my gosh, I met this guy who's gonna help me be rich, and I see the light, like talking a million miles a minute, right? And it kind of like he was like, "Wow, what? Did you join a cult or something?" And so anyway, right? Having 10 grand, not having 10 grand is an obstacle, not an excuse. That can be overcome, right? And so let's pull up a calculator here. All right, can a person save up money 500 a month times 12 months? That's $6,000. So within a little over a year, they could have the 10 grand if they were willing to commit and not use that as an excuse. Right? Obstacles can be overcome, but excuses cannot. You can make money or you can make excuses, but you can't make both at the same time. Right? Now, can you find strategies to trade with $1,000 to $5,000? Yes, you actually can. And I showed that last year in the Success Academy. We had a 5K to 50K case study. See, I'll touch on the 5K in a little bit. But last year we had a 5K to 50K case study. I started showing them how to grow a 5 grand account to 50 grand. It's the same 5-year retirement plan I followed. It's a blueprint to 10x in your account. Now, I use SPX, which is cash flow or vertical credit spreads. We call them cash flow trades, but a person with a smaller account could have used SPY, and I have a vertical credit spread pulled up here for SPY. It's a bullish spread, means it makes money when the market goes up. We wouldn't use that right now. We use bearish, but I just want to show you the risk reward here. And so this one, we would make $49. We could potentially lose 51. So you could do this with a $1,000 account. And if you did that last year, instead of using SPX, you just use one contract SPY, $1,000 account. I grew my account by 35% last year using just that one strategy. Now, the overall account grew bigger. It grew by 219%, but we walked through that, how we were able to do that in the training. But what I want to show you is the problem with the $1,000 accounts. And it's not so much the money, is that when people have a small account, they have a small account mindset, right? And that's usually what holds them up. That's why I don't teach that anymore. I thought I could help people, but it's just 100% failure rate. The people with those small accounts, there's a reason they have a small account, and it's usually because they have a small account mindset. Here's proof. You start with $1,000. Again, using that vertical credit spread strategy I just talked about. After 5 years, now I earned 34%, which is probably unrealistic for most people, and it's unrealistic even for me to get it every single year. So we're going to scale down to 24%. That's more realistic for option trading. So you start with 1,000. You make 24% a year. That is unheard of in the investment arena, right? People, if you told people you made 24% a year, they're not going to believe you, because even Buffett averages that, right? So you're in the top percent of all investors in the world if you earn 24% a year. But after 5 years of doing that, look how big your account is, $2,900. Now, let me ask you this. A person starting with 1,000, would they be willing to put in 5 years of long, hard work just for $3,000? Most of them won't, right? It's about mindset. They miss the fact that their account has tripled. Now, if you ask you that, are you okay with your account tripling? Most people will say yes, but they get stuck on the dollar amount. A person starting with 1,000 don't want 3,000. They want 50,000. I'll show you how to get to 50,000 here in a second. But that is why people with small accounts usually fail in my experience. It's because they have a small account mindset. They're not willing to put in all that work to triple their account and end up with $3,000. Not realizing that the returns they're earning are outstanding, and they just kept that up, they would actually build wealth over time. It would just take forever. Now, what is a better way of doing this? The same approach my mentor taught me. There is no wealth without savings, and that's another challenge people with a small account minds have. Small account people have. They don't have the mindset and discipline and habits required to build wealth, right? It's a reason they have a small account. And now this is a blanket statement. Everybody's situation is unique. Maybe they medical bills, things like that. But for most people, the reason they have a small account is because they have zero discipline. They're consumers. They're deep in debt. They just don't save money. If they get money, they spend it, right? But if a person was willing to commit, and this is what I had to do, and this is what we build wealth. If a person started with $1,000 and they were willing to sell their stuff like I did, right? Get an extra job. My wife got an extra job. I got an extra job when we were getting out of debt, and they were able to save an extra $500 a month. Same time period, 5 years, same percent return a year, 24%. Look at the difference there. $1,000 grows to $51,000. Yes, that's what everybody wants. And I would be willing to put in 5 years of work if I knew my 1,000 would grow to 51,000. But the moment you tell people, all right, you got to sacrifice, stop going out to eat, sell your car, get out of debt, save $500 a month, people are like, nope, not interested. I'm not trying to do that. And that's why people with a small account fail. But yes, you can trade with $1,000, but I've never seen people succeed starting with that amount. And it has more to do with their mindset than anything else. But yes, 5K, you can start with that. Again, even in Market Club, I was doing 3 5K to 50K case studies. Now I'm only doing 2. And in Market Club last year, we took 5K to 15K. Right now, it's at 19,000. So that's a year and a half. We've 4x that account. So it is possible, but I show people the mindset required, steps, strategies, blueprints. So that's in the Market Club Options program if you're interested in that. And I will put the link to that program below this video. Now, I promise this video would be 10 to 15 minutes, so it's a little bit longer. I do apologize. I have one more question to cover, and then I will let you go, and this one will be quick. So Someone wanted to know, since we're 6 months into this bear market, there's no telling how long it will go. One suggestion is to create a tutorial for preparing for a reversal. Basically, how to spot a market bottom. Great. I will share 3 methods, 4 methods right now. Most of them are already taught. So the Options Wealth Academy, 2 of the methods are taught in the Options Wealth Academy. 4 stages of a market crash. So that's how you use moving average combination to figure out when the bottom is. Also, in the 4 stages of a market crash, it talks about William J. O'Neill's counting method. Investors Business Daily, if you follow Investors Business Daily, they will let you know when the market bottom has happened, the confirmation. It's not always 100% accurate, but is accurate enough for most of the bottoms I've experienced, right? So those are 2 methods. Another method is using Market Club, right? We'll get the Market Club green monthly, and that will signal a bottom. And then, so those 3 methods. The last method here, which will be free, I'll show you right here, is the granddaddy of all strategies, the 200-day moving average, right? Most long-term investors use a 200-day moving average. As long as stocks are trading above the 200-day moving average, it's bullish, meaning they will buy stocks. If anything, if stocks are ever trading below the 200-day moving average, they won't buy stocks. It's bearish territory. So what you could do is, and I'm actually writing a book now, or updating one of my current books, teaching the strategy, so you're the first to see it. Basically, you can use like 5 on the 200-day simple moving average on a daily chart, 5 closes above that. They don't have to be in a row, but they should happen within a 2-week time period, right? So 5 closes above. Let's look at the most recent signal. So 5 closes above or below, right? So 1, 2, 3, 4, 5. So in this little congestion area right here, we got 5 closes below the 200, which signals bear market territory, which signals you can buy a put, trade bearishly. What happened around the same time period? The red monthly. So all these bear market bottom techniques, they're all around the same. They all trigger within a week of each other. Just pick whichever one you want, right? So the 200-day moving average is a simple one you can use. Coming out to 2 years, let's come out to 5 years back. Same thing here. Prices close below the 200. Unfortunately, I won't be able to zoom in on Market Club, but you can see still bear market of 2020, we got a red monthly around the same time period, right? Now, some of these back here, like this one, you would have been, Market Club got us out, but if you just use a 200-day moving average, you would have stayed in because prices never closed below it. And you would have stayed in for a long time and then eventually got out here where it did coincide or pair it with the red monthly. So that's another technique you can use. Just wait for prices to close above the 200-day moving average and make sure you have about 5 closes above it. And that's generally a confirmation that the market has stopped falling. So sorry for the video being so long, but I hope you found at least one nugget of wisdom. And what I'll do is release my first case study video here within the next few days, where you will watch me trade and invest my money during and throughout this bear market. So you take care, happy trading, and I'll see you in the next trading video. Bye-bye.